Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 153, published May 16th, 2025, titled Great Stock Picks in 18 New Articles. So this podcast is presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investment mentioned herein. Additionally, please visit the podcast webpage for links to the articles and additional company and stock information. I have a great crop of 19 articles for you in this podcast. The first article I'm reviewing appeared on InsiderMonkey.com. It's titled 11 Cheap ESG Stocks to Buy According to Hedge Funds by Ramin Kasana. Ms. Kasano employs fascinating methodology to arrive at her stock selection. Here are some quotes on her process and, importantly, her stock picks. We have compiled a list of 11 companies ranked by Sustainalytics, by Morningstar, in its recent ESG Top-Rated Companies report. From companies with a forward PE as price earnings less than 15, extracted from FinViz, F-I-N-V-I-Z, or Z. From there, we picked companies with the highest number of hedge fund investors as per Insider Monkey's database of Q4 2024. So starting with number 11, Flex Limited. Number of hedge funds holding 52. Flex Limited operates as a contract manufacturing company that offers design, manufacturing, and product management solutions to electronic and technology companies. While the Flex Agility Solutions segment is centered on communications, consumer devices, and lifestyle, the Flex Reliability Solutions segment encompasses markets like automotive, health solutions, and industrial. 10. Seagate Technology Holdings plc. Hedge funds holding 52. Seagate Technology Holdings plc is a leading provider of hard disk drives for data storage for both enterprise and consumer markets. With a presence in Singapore, the United States, the Netherlands, and internationally. The core offerings of the company include mass capacity storage products, legacy applications, and the LIVE, that's L-Y-V-E, edge-to-cloud mass capacity platform. 9. Crown Holdings, Inc. Hedge fund holding 53. Crown Holdings is a global packaging powerhouse operating through the Americas beverage, European beverage, Asia Pacific, and transit packaging segments. Founded in 1892, the company manufactures and markets recyclable aluminum beverage and non-beverage cans, steel crowns, glass bottle ends and closures, from food to household and industrial industries. The company serves a wide clientele. 8. Tapestry Inc. Hedge funds holding 57. Tapestry Inc. is a global house of leading fashion brands, particularly Coach, Kate Spade, New York, and Stuart Weitzman. Headquartered in New York, the company offers its products directly and indirectly via wholesale and licensing businesses. The enterprise claims to use its strengths to empower communities and make the fashion industry more sustainable, equitable, inclusive, and diverse. 7. Hewlett-Packard Enterprise Company. Hedge funds holding the stock 66. Hewlett-Packard Enterprise Company is a US-based leading information technology company that provides smart solutions and cloud-based services. The core offerings of the company include servers, storage devices, network products, software, IT support, and customized financial solutions. From retailers and distribution partners to direct sales management, independent software vendors, and equipment manufacturers, the tech giant markets through a range of experts. 6. Regeneron Pharmaceuticals Inc. Hedge funds holding the stock 68. Regeneron Pharmaceuticals is a leading biotechnology company serving people living with eye disease, cardiovascular disease, cancer, and inflammation. Headquartered in New York, the company develops and markets life-changing medicines for people with severe illnesses. Driven by its doing well by doing good philosophy, Regeneron Pharmaceuticals facilitates a culture that promotes integrity and builds sustainable communities. 5. The Cigna Group. Hedge funds holding 72. The Cigna Group is a global health company providing insurance and related products, with two main segments, Evernorth Health Services and Cigna Health. It has a vast offering, including coordinated and point solution health services and pharma-related care, based in Connecticut. 4. Elevance Health Inc. Hedge funds holding 73. Elevance Health is a US-based health insurer that operates through four segments, including health benefits, Carelon RX, Carelon Services, and corporate and other. Incepted in 2001, the company also provides pharmaceutical services, managed care services, health products, and behavioral health management, among others. 3. Qualcomm Incorporated. Hedge funds holding 79. Qualcomm Incorporated, headquartered in California, is a digital telecommunications provider operating through three segments, namely Qualcomm CDMA Technologies, Qualcomm Technology Licensing, and Qualcomm Strategic Initiatives. With a market capitalization of $162.449 billion, the company is recognized as the 158th most trusted company in America by Forbes. The core values of the company include empowering people, transforming communities, and protecting the planet. 2. Cisco Systems Inc. Hedge funds holding the stock 84. Cisco Systems is a US-based firm that offers information technology and networking services. Incepted in 1984, the company also offers network security and access management services. Cisco delivers its products and services directly and indirectly through system integrators, service providers, and other distributors. And number 1, Western Digital Corporation. Hedge funds holding the stock 85. Western Digital Corporation is a California-based global leader in the hard disk drive market. While providing data storage solutions, the giant is fully dedicated to preserving and protecting the planet. The company's initiatives revolve around reducing, recycling, reusing, and saving for the generations to come. End quotes. The second article comes to us from the renowned Morningstar site. It's titled, 2 Undervalued Automation Companies for Sustainable Investors. It's by Liz Angeles. Now some quotes from her article. The Morningstar rating compares a stock's current price with Morningstar's estimate of its fair value, which is based on the present value of the company's future cash flow. A 4-star stock is undervalued, and a 5-star stock is significantly undervalued. So 1. Sika Group. Established in 1910, Switzerland-based Sika produces specialty chemicals primarily used by the construction sector, 85% of sales. Its products are mainly used for bonding, sealing, reinforcing, and protecting in the construction and automotive industries. Approximately 70% of its products have a positive impact on sustainability for customers. Sika has a global manufacturing footprint of more than 400 factories spread across over 100 countries. Its price quantitative fair value 0.89. Quantitative Morningstar rating 5 stars. ESG risk rating assessment medium. Sector basic materials. And the second company is Zebra Technologies. Zebra Technologies is a leading provider of automatic identification and data capture technology to enterprises. Its solutions include barcode printers and scanners, mobile computers, and workflow optimization software. The firm primarily serves the retail, transportation logistics, manufacturing, and healthcare markets, designing custom solutions to improve efficiency for its customers. The analyst for this company is William Kerwin, CFA. Price fair value 0.75. Morningstar rating 4 stars. ESG risk rating assessment negligible. Sector technology. End quotes. This third article has a perspective that many investors concur with and posits it regarding Netflix. The title of the article is Possible Stock Split? This stock has surged 284% since 2023. Here's why you shouldn't wait to buy it. It's by Adam Levy of The Motley Fool and found on finance.yahoo.com. Here are a few brief quotes from Mr. Levy's article. But enacting a stock split can be a very strong signal from management to investors. Management will usually initiate a stock split after a run-up in the price of the stock. When it announces a split, it's suggesting the current run-up in price is justified and that it expects the price to continue climbing. On the other hand, the confidence boost provided by a stock split will only go as far as the company's next earnings report or news item. If the fundamentals of the business are no good, or the stock has gotten ahead of itself, it doesn't make sense to buy it just because of the stock split announcement. One stock I've had my eye on looks poised for a stock split this year. It's up 284% since the start of 2023, and investors have an opportunity to get in now whether management announces a split in the near future or not. And that stock is Netflix. End quotes. The fourth article I'm posting appeared recently on one of the finest sites I know, that is corporatenights.com. The article's title is Pandora's Big Bet on Sustainability Pays Off. It's by Naomi Buck. Here are a few quotes from the article. According to those who study consumer habits, millennials and Gen Zs are looking for two things when they go shopping: sustainability and individuality. One jewelry company is capturing hearts and wallets by offering both. Pandora, launched as a family-run jewelry shop in Copenhagen in 1982, has grown to become the world's largest jewelry maker by pieces sold. And unlike much of its industry in recent years, Pandora's star is rising as competitors like Tiffany and Signet see diminishing returns. Pandora ended 2024 with 31.7 billion kroner, that's US $4.5 billion in annual revenue, representing 13% organic growth. In 2019, following several years of declining sales, Pandora embarked on a new strategy to expand its product line beyond the luxury charm bracelets, for which it had become famous, and go all in on sustainability. It established 3 new priorities: to decarbonize, push circularity, and promote a more diverse corporate culture. While sustainability may be front of mind for younger buyers, Pandora CEO Alexander Lasick admits that the average jewelry shopper is looking primarily at design and price. But even if customers weren't clamoring for it, Pandora's sustainability push has proven a sound business decision, according to its 2024 annual report. The company has grown by 45% since 2019. No doubt others in the industry are watching with interest. End quotes. Also, see this New York Times article on Pandora, How the World's Largest Jeweler is Surviving the Trade War. It's by Eshe Nelson. This fifth article was also posted on corporatenights.com with the same author as the previous article, Naomi Buck. Its title is Italy's ERG Proves You Can Trade Oil for Renewables and Win. Again, here are a few quotes from the article. In 2008, the Italian oil company ERG faced a crossroads. Having sold its 49% stake in a Sicilian refinery to Russian oil giant Lukoil just before the markets crashed, it had cash to burn, and it had a fundamental choice to make. By 2013, ERG had become Italy's leading producer of wind energy. It now has installed capacity in the United Kingdom, Germany, France, Poland, Romania, Bulgaria, and Sweden, making it one of the continent's top 10 wind companies. It also owns major solar installations in Italy, Spain, France, and the United States. ERG's wholesale transition from black to green took little over a decade, and with it the company redefined itself. No longer responding to Italy's demand for oil, it sees itself, in its own words, inspiring change to power the future. End quotes. Now, more articles of interest for ethical and sustainable investors from around the world that I didn't have time to cover in the manner as above. 1. Title: Top 3 mutual funds to invest in India 2025 on shariasecurities.com by Sharia Securities. 2. Title: Top Halal Mutual Funds for 2025 on tradersunion.com by Alamin Morshed. 3. Title: Investing in Green Bonds, Your Complete Guide on Fool.com by Benjamin Locke. 4. Title: Making Sense of a Rough Quarter for ESG Funds on FT.com by Simon Mundy. 5. Title: 11 Most Carbon-Friendly AI Companies Leading the Sustainable Technology Revolution on the ImpactInvestor.com by Carl Kroger. 6. Title: Simon Property Group, a top socially responsible dividend stock with 5.3% yield on Nasdaq.com by BNK Invest. 7. Title: How Some Companies Are Rapidly Adapting to the Energy Transition on CorporateKnights.com by Naomi Buck. 8. Title: 3 Large Cap Stocks with Solid Fundamentals on Finance.yahoo.com by Kayode Omotosho. 9. Title: Understanding ESG Scores and Their Impact on Investment Choices on Equities.com by Shane Neagle. 10. Title: ADP named a top socially responsible dividend stock on the onlineinvestor.com by Online Investor Staff. 11. Title: The Best AI ETFs to Buy in 2025 on moneymagpie.com by Ruby Leram. 12. Title: 13 Best AI Stocks to Buy under $10 on insidermonkey.com by Abdul Rahman. So these are my top news stories with the stock and fund tips for this podcast. Great stock picks in 18 new articles. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on May 30th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing pace tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.